G'day mate, how you going? Well, let's today talk a little bit about finances, a little bit about money. If you could rate, how would you rate your companies or even your personal finances? Do you think your company or even yourself are actually doing well financially? We're going to explore some vocabulary here. When we consider, we have a few names that are pretty common when we talk about finances. One is factoring, the other one is loan. The other one is debt financing, collateral, line of credit, and crowdfunding. Now, when do we use these things? What do we use them for? Basically, when a company borrows money from a bank, or a lender, what would you say that is? So if you have a company you are borrowing money from a bank or a lender, is that factoring, loan, debt financing, collateral, line of credit, or crowdfunding? What would you say that is? Now, when that happens, when you borrow money from a bank or another lender, that is definitely debt financing. You can finance this debt from a bank or someone else. Now, you also have the option to raise capital from the public, typically via the internet. And we can do that doing what exactly? We can crowdfund this money. So we can do some crowdfunding for that. And we can also get money. We can borrow money from a bank to fund the growth of our business. When we have businesses and we want to grow this company, we can get a loan for that. Of course, nothing that I'm saying here is a recommendation. I'm just sharing vocabulary with you and also some possibilities of things you could be doing for your personal or professional finances. And you have to consider what's best for your reality. But it's mostly an English class with vocabulary for you to learn. Now, we also have the option of using a property, a personal guarantee as a security for a payment for this loan that I've just mentioned. And what is this property? This guarantee called. We can call these guarantees collateral. So we can use a collateral as a guarantee. For example, I can put up my, let's say I have a car. So I can put up my car as a collateral for a specific loan that I'm getting with the bank. Just in case I don't pay the loan for, a few months, depending on the contract you have, 3, 4, 5 months, I don't pay, they'll take my car so they can sell it and they can pay the debt that I have with them. So I recommend you pay so you don't lose money in your car or whatever that is that you put in as a collateral. And well, we also have this option of selling the receivables just in case the receivable debts, or invoices, because sometimes the companies, you have your customers don't pay you need the money, so what do? You sell. You take this debt that your customer didn't pay you sell this to another company, so you factor this to another company, and this other company will call this customer and will charge this customer for the debt that the customer didn't pay you. Now, of course, that when you factor this, it means when you sell this, it means that you are not going to get all the money that the customer owed you. So you are going to be losing money. You're going to sell that with a discount, not the price that you are actually that the customer actually owed to you. That's important to know. And of course, do you have money with the bank? Do you have ongoing access of money from a bank? Do you think you can get like 1,000, 2,000, 10,000, 100,000? How much can you get with the bank? And depending how your line of credit is, that's how much money you are able to get. Do you have a good line of credit, a good relationship with the bank? You spend a lot of money with the bank, but do you pay your bills always on time? Do you have credit cards with them? Do you have products with them? Do you have insurance with them? The more things you have with the bank, and of course pay them. Yes, you have investments with the bank, perhaps. Yes, you have a specific amount of money with the bank as investments. If you have all this, you are creating a relationship with the bank, and you create a better and better line of credit, which means the bank can loan you more money, which can be dangerous. So please be careful with that. Yeah, it's good to have a relationship with the bank, but it's good to know how much you can spend or not. Yeah, so you don't get into financial trouble and worries. So yeah, that's basically it for this part. Yeah, and some examples for you in a sentence. I've created some sentences for you. We have been offered reasonable terms to get a loan to start our new business. Debt financing has helped to drive our company's growth. I believe we can pay off the bank in no time now. For this loan to be granted, you will have to put up your car as collateral. Factoring may sound like a solution for quick cash, yet it might cause cash flow problems in the future. Yeah. The better your performance and financial management, the higher the line of credit you can get from your bank. And crowdfunding was an amazing idea to raise money since did not have line of credit with the bank, let alone a loan. Yeah, so these are some examples of sentences that you could be using these sentences, these expressions in sentences. And I leave you with a few questions here so you can think about that and perhaps answer these questions in the comment sections below. First question is, do you have a good line of credit yourself? Have you ever taken out a loan? Are you still paying for this loan? If not, how hard is it to pay it off? And speaking of this loan, did you have to put up a collateral in order to have it granted for you? Yeah, if so, what was it? What did you put up as a collateral? And does your company, if you have a company, does your company factor because of these defaulters, these people who do not pay for their bills? Now, how does your company deal with them? How does your company deal with these defaulters? Let me know in the comment sections below, and let me know if you need any more content, and I'll be happy to share that with you. Cheers, mates. Take it easy.